Money. What is it to you? For some, it's just a tool, a means to fulfill desires. For others, it's power. The kind of power for which people abandon their family, their honor, even their principles. And some say, money is just an illusion, a string of numbers glowing on a screen. But for others, this very money is freedom, security, and the feeling of being truly alive. Whatever money means to you, one truth remains. If you don't control money, money will control you. Either you run your money, or your money will run you. Tony Robbins says, money is a game mastered by legends like John C. Bogle, Warren Buffett, and Ray Dalio, who earned billions. And in this game, you too can be more than just a pawn. You can become the master. From this book, you'll learn how to achieve financial freedom, enough money so you'll never have to work again in your life. Enough so that medical bills, children's education, or wedding expenses never hang over your head. Sounds like a dream, doesn't it? But this dream can be turned into reality. And Book Blink will show you the way. Make the most important financial decision of your life. Maybe your parents told you, work hard, get a good job, take care of your family, and grow your bank balance. But the truth, even after decades of work and a regular salary, most people never achieve financial freedom because earning alone is not enough. You have to invest wisely. Now let's talk about a magical financial formula, compounding. The interest you earn on your money also earns interest the next year, and this cycle, year after year, can skyrocket your wealth. There were two twin brothers, William and James. William started investing at the age of 20. Every year he saved $4,000 from his salary and put it into a retirement account. He kept doing this until he was 40, then stopped adding new money. But his investments kept growing at 10% annually. On the other hand, James started investing at 40. He too invested $4,000 every year for 25 years until he was 65. Now think, who had more money at 65? James invested a total of $100,000. William invested only $80,000, and the result? James had around $400,000. But William, a staggering $2.5 million. That's the magic of compounding, because William started early, never touched his interest earnings, and invested consistently for 20 years. The lesson is clear. The earlier you start, the further you go. Give your money time to grow. And watch how it works for you, even while you sleep. Know the rules before you get in the game. Your first question might be, where do I start? Where should I invest? Do I need a broker or a financial advisor for this? Tony Robbins is very clear, no, because these so-called investment experts are often eyeing your money more than they're protecting it. Let's say you want to invest in a mutual fund. You find a big brokerage firm that will invest your money on your behalf, but in return they'll charge heavy fees. Sounds simple. You give the investment, they take care of the rest. But the reality, you give them 100% of your money and also take on 100% of the risk. On top of that, your broker could take as much as 60% of your investment in fees. Whether you make a profit or suffer a loss, their fee is guaranteed. Hard to believe, but 90% of Americans invest in mutual funds on these very terms. Globally, there's around $13 trillion in mutual funds, and just imagine how much of that ends up in brokers' pockets. So why do people still do it? Because marketing has made the investment world so complicated that the average person can't truly understand it. As a result, they feel forced to rely on brokers, gleaming reports on TV, surging stock exchange updates. People hear this and start pouring money from their living rooms, and the only one smiling is the broker. Have you seen The Wolf of Wall Street? Leonardo DiCaprio's character and his friends, throwing parties, doing drugs, living in luxury, all with investors' money. That story isn't just confined to the movie. In reality, this game has played out many times. So the question is, where should you invest? Whom should you trust? The answer, yourself. Become a smart investor, learn, read books, and become a money master like Warren Buffett or Ray Dalio. But before stepping onto the field, you need to understand a few rules. One crucial rule: invest in index funds. A stock index is like a basket of stocks. The S&P 500 is a great example, a list of America's 500 leading companies, including giants like Microsoft, Apple, Facebook, and Amazon. Investing in an index fund means becoming a part owner of these top 500 companies. Why is this path better? First, these companies won't collapse overnight. Second, lower risk and stable returns. Third, you won't need to depend on a broker because the S&P has already selected the best for you. What is the price of your dreams? How much money do you need for financial freedom? $1 million, $10 million, or $100 million? We often think we need huge sums to live our dream life. But in reality, that's not always the case. At one seminar, Tony Robbins asked, "How much money would you need for a happy and peaceful life?" A 20-year-old young man replied, $1 billion. The room was stunned. Tony smiled. "Let's see if you really need that much." The young man explained he'd buy a private jet, a house in New York, attend business meetings in Los Angeles, and vacation in the Bahamas, at least 12 flights a year. Tony started calculating. A brand new private jet, $65 million, secondhand, $10 million, maintenance, fuel, crew, extra. But what if you didn't buy it and instead rented? Only $2,500 per hour. If you flew 100 hours a year, $250,000. Want a premium jet? $500,000. Still far cheaper than buying a new jet. Next dream, a private island. Tony owns a 500-acre resort in Fiji, but with his busy schedule, he only visits a few weeks a year. He warned, if you truly want to relax, don't start a hotel business, or you won't have time to even sit on the beach. A little research revealed you could buy an island in the Bahamas for $100,000 and build a resort for $40 million. But renting Richard Branson's Necker Island for a week? Just $350,000 with 50 staff, your whole family and friends included. Go every year for 1 week and you could live that dream for $3.5 million. The result? That young man needed only 1% of $1 billion to live his dream life. And if he became a smart investor, achieving that freedom was completely possible. Asset allocation. So the question is, how do you reach $10 million? The direct answer, smart investing. And its most powerful weapon is asset allocation. The idea is as old as the saying, don't put all your eggs in one basket, meaning don't trap all your money in one place. Save a portion, invest it wisely in different areas, and then stay committed for the long term. Why is this important? Because if one investment goes wrong, the others will help balance it out. But if everything is in one place, a single blow can wipe it all out. The beauty of asset allocation is lower risk, lower costs, and better long-term returns. You can spread your money, some in bonds, some in stocks, some in real estate, and some in commodities. 2 stories that teach a lesson. One of Tony Robbins' friends put all his money into Apple stocks. Think about it, one of the most successful companies in the world. But within a few weeks, the stock dropped, and because all his money was tied up there, he couldn't do anything. Another friend at the top of the TV industry quit his high-paying job, sold his expensive apartment, and put all his money into a restaurant in Wyoming, junk bonds, and high-risk stocks. At first, things went well. But when the 2008 crisis hit, everything sank. The result, he had to start from zero again, even taking freelance jobs to survive. The lesson is clear: investing in just one place, no matter how safe it seems, is dangerous. 2 investment buckets. Tony divides this game into 2 buckets. Security, dark peace of mind, bucket. This is where your money stays safe. Growth is slow, but your heart stays at ease. Includes cash or cash equivalents, your savings account, which you can access anytime. Low interest, but most reliable in emergencies. Bonds, loans to companies or the government for a fixed time at a fixed interest rate. CDs, certificates of deposit, giving money to the bank for a set period in exchange for fixed interest. Life insurance policies, protection for your family even after you're gone. Risk/growth bucket. Here, the risk is higher, but so are the returns. Includes ETFs, exchange-traded funds, groups of stocks you can buy and sell in the market. High-yield bonds, junk bonds, higher profits but lower security. REITs, real estate investment trusts, investing in income-generating properties without managing them yourself. Commodities, gold, silver, oil, assets that balance your portfolio and protect against inflation. The real game of smart investing is this: spread your money so that losses in one area are covered by gains in another. That way, whether the market rises or falls, your game stays strong. The all-season strategy. In earlier chapters, you learned why diversification in a portfolio is essential. Putting all your money in one place is like inviting risk to your doorstep. If you want more safety, go for the peace of mind bucket. If you enjoy a little thrill, play in the risk/growth bucket. Now let's talk about one of the most remarkable investment plans in the world, the all-season strategy. This brilliant concept was created by Ray Dalio, founder of Bridgewater Associates and one of the world's top hedge fund managers. In 1971, Ray Dalio began his career as a clerk at the New York Stock Exchange. Times were far from easy. America was battling record-high unemployment and inflation. Then, in 1973, came the oil crisis. Prices shot up from $2.10 to $10.40 per barrel. The government introduced an odd-even scheme, and people stood in long lines just to buy gas. Then came the Vietnam War, the Watergate scandal, and President Nixon's resignation. Political and economic turmoil shook the markets. Stocks swung wildly day and night. It was during this chaos that one question kept echoing in Ray Dalio's mind. What's the real connection between market movements and the state of the economy? After years of research and testing, he developed the all-season strategy, an asset allocation method that delivers steady performance in both recessions and booms. And this wasn't just theory. From 1974 to 2013, a full 40 years, those who followed this strategy saw an average 10% annual return, only 4 losing years in 40 years, an average loss of just 1.74%. Even in the 2008 financial crisis, the maximum drop was only 3.93%. Those are truly extraordinary results. So what's the formula? Most people say 50% stocks, 50% bonds. That should balance risk. But Ray Dalio calls this a financial myth because stocks are about 3 times riskier than bonds. A 50-50 split actually gives you the same risk as having 95% of your money in stocks. His tested and proven formula is 30% stocks, like an S&P 500 index fund, 15% intermediate term bonds, maturity of 7 to 10 years, 40% long-term bonds, maturity of 20 to 25 years, 7.5% gold, protection during inflation and a store of value, 7.5% commodities, oil, metals, etc., to balance the portfolio. And most important, rebalancing. If one asset grows too much and takes a bigger share, sell a little and bring it back to the original allocation. Ray Dalio insists this annual rebalancing is non-negotiable. The all-season strategy isn't just an investment plan, it's a financial shield. No matter what the economic weather's like, your portfolio is always ready to play. Conclusion. So here's the straight question. What are you going to do for your financial freedom? A life where the word money stress doesn't even exist. Will that remain just a dream, or will you make a plan to turn it into reality? The truth is, you need to walk the path where your money doesn't just sleep in a bank, but works for you. The small amounts you save over time, if invested wisely, can become your greatest strength. You've seen the magic of compounding. Start early, and the benefits multiply dramatically. Save a fixed amount every year, invest it, and you hold the key to unlocking your financial lock. You've learned what financial myths look like and why blindly following a broker can be dangerous. Now you understand how options like index funds can deliver good returns with lower risk. You've also discovered that to live a millionaire's lifestyle, you don't have to be born one. With the right planning, private jets, your own island, these can be within your reach. This book showed you the importance of asset allocation. Never put all your eggs in one basket. Diversification is the shield that protects you from the market's ups and downs. Whether you choose the slow and steady peace-of-mind investments or take on some risk for high growth, both paths are in your hands. And then came the all-season strategy, Ray Dalio's masterpiece. A portfolio that stands by you no matter the season, 30% stocks, 15% intermediate-term bonds, 40% long-term bonds, 7.5% gold, and 7.5% commodities. And yes, never forget to rebalance it every year or its magic will fade. So does investing still feel risky? Probably not anymore. Now you know the basic rules of this game, and you've picked up some master tricks too. Leave fear behind. It's your turn to play and to win. And remember, this isn't a book you read once and put away. Whenever you feel confused, whenever your confidence wavers, read it again. It's your trusted guide, one that will never let you down.